I had a question too, and
Sure.
this just popped up into my mind. So I did a video last week about how the Divvy Homes program, because we've talked about how Divvy
Mm,
is now trying to get into credit repair and
mm,
eventually into mortgages. So we
mm.
have this new program that they're implementing called the Home Ownership Prep Program, but they're only looking at, as of last week, they're only looking at the experience score. If you know anything about Divvy, you'll know that that's the score that they look at for their program to qualify people for their program. My advice was get connected to an agent before you even decide if you want to do something like this, because after the trial period, you have to pay $14.99 a month. So my advice was get connected to a real estate agent if you're able to, but then also I don't know the benefit of it if you're just looking at one of the credit scores. Can you on how important it is for people to know, buyers to know all their whole
Sure.
credit history instead of just
Sure.
one bureau? You need to know all what's
Totally.
going on all of them.
Yeah, I totally agree with that because typically what happens when mortgage lenders, when we look at credit, we pull all three if they're available. Because what happens is, say all three aren't available for some reason, and I'm not talking about frozen, just like say you only had one trade line and it was a credit union that reported to Equifax and TransUnion only, then we would take the lower of the two. Or if you didn't have two, you only had say you only had it didn't have three, you only had one, then that's the only one we can use. But however, if you have all three scores and someone is basing a decision off just one score, that could negatively impact you because that may be the lowest score. And say they're using the lowest score, and say it's because the interest rate goes off that credit scores. And I've seen over the years, I've seen some huge differences or some huge variances between the lowest score and the middle score, or the lowest score and highest score. It just depends, because sometimes, like I said, all creditors don't report to all three. That's why usually when somebody is building credit, I usually advise them to use like a major bank or one of the larger credit unions that we are pretty sure report to all three bureaus. So yeah, I would throw a lot of caution to using any program, lender, whomever it is, especially for a purchase as large as a home that only uses one of the three bureaus. There's three bureaus for a reason.
Right. Exactly. Those were my thoughts. And then I also spoke about how it is better to just go ahead and get connected to a lender. That way,
Sure,
I mean, and that's free. I
sure.
don't know of any lenders that are charging you in order to get your information. Maybe
Yeah,
like a credit report or something like that. But
sure. Now I will say this, and I'm not talking bad about them, but there's times when there are a lot of brokers. I don't know if I was maybe not a lot. There's definitely some brokers that I know that will charge for a credit report. I've
mhm,
even talked to people after they paid however much it was. Credit reports have got more expensive for lenders to pull, and just the law of averages is, I say maybe half of our credit pools that we do, the folks don't qualify.
mhm,
And so you've just absorbed, say it's a joint credit pool, you've absorbed, however much it is, 80, $90, and there's not likely to be an offset of a funded loan on that, to offset that. So I have seen people told me, and I know of some brokers that do charge for credit reports. I have never asked anybody for money to look at their credit. I've even advised them. I even advised someone not too long ago because she was just curious about what her credit score was. I was like, well, you can get a free report. You can get a free report, but you probably would have to pay for your score. I was
mhm,
like, there's a number of websites that you can go and if you need monitoring over time,
mhm,
it's best to use like Experian.com or some product that Equifax has. versus me pulling it because it's just a snapshot and it's not like I'm going to get an alert when something new comes in. Because when we look at credit, say if we're in the pre-qual phase and once we have a credit pull, that credit report is good for 120 days. So unless something happens or we want or your score drastic, we can kind of know for reasonably certain that your score is much higher, or we want it to get higher, and we can do a rescore. But if that's not needed, we're not going to pull credit again if we're closing within that 120 days.
Right. That is good information. So yes, get connected to a lender in order to get that, or go online and get it for free if you can to get that information instead of spending $15 and then you don't even know if all
Exactly. Exactly. And
will
I think
qualify.
I think our cost now for a credit report is about $41 on the lender side. I don't know. I don't think because at Silverton, we don't have line items, some statements, some loan estimates, underwriting fee, and this fee. We just do like a flat origination charge. So I don't think we specifically spell out because typically you do get charged for the credit report in your closing costs.
That makes sense. Can you speak about new construction? Because again, looking on your Facebook page, I noticed that you
Sure.
you
Sure,
were
yeah.
doing
So
new
new
construction.
construction. So the company, so Silverton has a huge presence in not just in the Metro Atlanta area, but in other areas, but definitely Metro Atlanta with builders. And so the builder account that I work most closely with is Chafin. New construction is really, for lack of a better term, new construction is hot right now. The reason why is because we're just in a high interest rate environment, and honestly, interest rates are moving in the wrong direction. Today was a brutal day. I saw, or it is because it's still ongoing, because more and more economic news is coming out that is suggests that inflation, that we haven't seen the worst of inflation, or it's not completely. There's still some inflation worries. Like today, it was, I think, consumer spending or something like that. It's still been pretty resilient. So what builders are doing to combat that is they are using money, or they're offering money to home buyers to buy down their interest rates. Right now, Chafin is doing a program, or utilizing this thing called forward commitments, and where right now, so they have one ongoing through May of next year, that where the rate, and this is a fixed interest rate, where it's a 5.75% interest rate, and a new one came out for the next block, where it's still going to be very, very competitive. It's going to be 5.99%. So essentially, with that, you'd have to qualify for a conventional loan. All of the lots don't qualify for that. I'm not sure how they selected what lots, but
Mhm.
even the lots that don't qualify for that for commitment pricing, the builder is still giving almost 2.5 points, like 2.375 to be exact, points towards buying the interest rate down. I don't have it right in front of me, but say even rate, if the rate is in, and you can use it a number of different ways. You can either use it towards lowering your closing costs, or you can use part of it to lower your closing costs, part of it to use towards buying the rate down. You can use most of it to fund a 2-1 buy down, which essentially a 2-1 buy down is more of a temporary rate decrease, versus like the forward commitment is more of a permanent one. So with the temporary one, you would, within about 24 months, you would still want to refinance. But just that's kind of what it has been pushing a lot more and more buyers towards new construction, because there's the advantages to it. You get to pick your lot, and you got this. You can you've still got below market interest rates.
Yes, that sounds fabulous. But what's the price point on these houses, Fred?
That's a great question. Now, because Chapin's properties are mostly in Gwinnett,
Mhm.
Hall, and Forsyth County. So you're talking about the fours and up. Now there are some other builders where, but most new construction now is in the threes because that's just where the threes and higher is just where the margin is. You know, you'd be hard to press to find a builder building homes in the close. You know, it's on anywhere close to Atlanta for in the two. It's just it's probably just not profitable for them to build at that price point.
But I did find some.
Oh,
DR
really?
Horton,
Where are they? Where are they?
DR Horton has some townhouses in Decatur around yep, under 300.
Okay, well, you're gonna have to show me those. That's
Yeah.
awesome. I mean, that's great. We need more. We need more affordable inventory, existing and new. Move in ready as well. So that's great. I won't say the problem, but one of the things that's tough about that is competition.
Mhm.
I would imagine if you got a price point that affordable and you've got builder incentives, oh gosh, there'll be, it's probably pretty tough to because when the market was hot, it was the first time in 2021, first time I'd ever heard of builders asking for highest and best.
Yes.
Like I didn't think that was a thing. I thought the price was the price when with builders. I have seen it in buyers markets where people have gotten under contract and got some deals, but now, builders are, they're people are, everybody's fighting for the same inventory.
Yep, that is so true.
Right. Buyers can get some really good deals, especially if you're on that mid to high price index, fours and fives. I was in a builder sales meeting just on Thursday, and these builder sales folks are motivated to move the inventory, the existing inventory that they have, because the builder is ready to break ground on some new subdivisions, and to allocate your resources and everything like that and get their capital back out. They need their standing inventory to move.
Mhm. Yep, that is true.